the crowd was not energetic, I thought, then I found that the lights were not on. You people are energetic. So all right, we'll push on. So we are actually moving to the next important thing, the tax invoice perspective. I hope everybody joined the session. Should we start or should we wait for some people? Okay, all right. So, yeah, I'll inform the team. So tea break will be at 4:30. Okay, and the class also, the session also gets concluded at 4:30. Because they have function here it seems. And tomorrow, what is the state? Same time, 9 o'clock. And evening until what time? 1:30. Evening. Until evening 5 o'clock, and we will have discussions. In fact, okay, we will plan it tomorrow. So that I want to have external session. Tomorrow also just check with them, the hall is available. I want half an hour extra. Okay, all right. So now we'll start the session. Okay, we are getting into the most important aspects. Now that you have understood the framework, don't leave your understanding just with understanding. You have to know what is the contents of the invoice, how the invoice is going to be structured to the extent where it gets aligned to our outward supplies, and then from there how it goes to inward supply, how the return filing process, everything we will get to know right now. Look at this invoice. This is the invoice. First of all, okay, all right, let me take you through the contents of the invoice. Just a second. Now, how many copies of invoice has to be generated? There are 3 copies. One is original for the recipient, duplicate for the transporter, triplicate for the supplier. Hope you got the point. For example, in case of the supply of the goods, 3 copies has to be generated. Even now it is the same. First, it's original for the recipient. 2, duplicate for the transporters. 3, triplicate for the supplier. And now, in case of the supply of services, the invoice will be for original for the recipient. 2, duplicate for the supplier. Accordingly, how many invoices you will generate? 3 invoices in case of the supply of goods, and 2 invoices in case of supply of services. Now, when you are generating 3 invoices in case of the supply of goods, you should not forget that the government of India, under the GST regulation, have thought through a new mechanism. It's already existing in the Karnataka, that is your e-way bill. What is this e-way bill? Along with your invoice, while the original for the receipt, that is when the invoice is generated, when the second copy of invoice is handed over to the transporter, we need to attach the e-way bill to the transporter. And the transporter carrying that, and 1 copy will go to the supplier. And the moment the transporter goes, he has to match the invoice, yes or no. And e-way bill, there is a rate structure given for the e-way bill. There is also a procedure for the e-way bill. Basically, the government says, don't move your goods unnecessarily, waste of time. To ensure that does not happen. Why logistics inefficiency is there? You are not planning the logistics properly. When you don't plan your logistics properly, it not only affects your business, it affects other business also. How? Because you keep standing on the queues for paying. Nearly 8 to 9 hours drivers used to stand. Yesterday I was just verifying. Average time somebody spends in each state paying the taxes is 8 hours. Now a lorry which starts from Chennai goes to Kashmir. Think how many times you have to spend. 26 states, let's assume not 26 states, let's assume they cross easily 7 states to 8 states. Then 8 into 8, 16 hours is 64 hours, 64 hours people stand on queue itself, and the driver has to drive the lorry also. This is not only affecting the production, it is also, logistics efficiency is not only affecting the production, entire trade is affected. So to bring efficiency, the first step that the government has done is the e-way bill. We will look at the contents of the e-way bill. Very, very important. Many people think e-way bill means, no, the lorry will be given an e-way bill. No. It is to ensure that the movement of goods happen in time-specific manner, that the government of India has actually brought the e-way bill. All right. Bill of supply. This concept of bill of supply is still there. Bill of supply is to be issued by a registered supplier in the following cases. Supply of exempted goods or services. Supplier is paying tax under compensation scheme. These are the 2 times when they issue the this bill of supply. All right. Let me come back to the e-way bill later point of time, because it's all procedural. I don't want to bore you. Now, very important from the perspective of both business, that is business persons as well as for the accountants. With respect to accounts and other records, what are the records that you need to keep? How do you need to keep it? First thing, true and correct amount of production and manufacture of goods, of inward and outward supply of goods and or services, of stock of goods, of input credit availed, of output tax payable and paid, and such other particulars as may be prescribed in this behalf at the principal place of business has to be maintained. In the principal place of business. It is true and correct. Being a chartered accountant, many people here, you know what is the meaning of true and correct. Materiality does not apply in case of certification work, yes or no? And there is no materiality with respect to certification work. Sir, no sir, some of the people are signing without saying. Then it is not professional, you are not exercising the professional duty. Any negligence under the CA Institute provisions, any negligence, any mistake also, it goes through the disciplinary process. But if it is a gross negligence, there is no pardoning. So now I did not see, sir. That can never be pardoned. Your job itself was, you are being qualified to see actually. If you don't see, it is gross negligence. Nobody can save you. Accordingly, this is true and correct. Why it should be true and correct? It will be true and correct only, no? Whatever inward I get, it is accounted. Whatever outward I get, it is accounted. It is connected to my financial accounts. Obviously, all the records has to be correct. Why they say it should be correct is because if it is incorrect, it will affect the entire value chain. Yes or no? So it is a very sensitive thing where the consultants has to help the clients to actually record the data properly. In fact, we need to train them properly to how to upload the data, how to generate the data, everything you need to train. Who will train? Chartered accountant has to train. Because the accountant in the company already is burdened with MIS reporting and annual closing, every month TDS deduction, and now the manpower requirement has increased because of GST coming in. Manpower requirement has increased presently. Later it may not require. It's an opportunity to enter the client and then establish your long-term relationship. And don't forget, some clients are looking at outsourcing itself. They don't want to have the burden. And accordingly, these are the opportunities that you need to look at. In case where there are more than one place of business as specified in the certificate of registration, the accounts relating to each place of business shall be kept at such place of business concern. So for example, I run a branch across 29 states. It's feasible to, I consolidate the accounts at the year end of all the branches. Then the principal place of business can be, that means records can be maintained in the place other than the principal place of business. It is allowed as per the GST. Does your Companies Act allow? Yes, it allows. You need not maintain the records in the registered office. It can be maintained in any other place, provided the board of directors approve it. Same is the case here. The act itself says, the GST itself says, if it is a principal place of business, maintain the records in the principal place of business. If it is not, then you maintain the other place of business. All right. Now, audit accounts. This is an opportunity for the chartered accountants. Audit become mandatory, just the way the tax audit is there. So for the GST comes out with an opportunity where you can pick up all the registered dealers, all the registered persons have to be audited. If you are a GST consultant, if you hold a certificate of practice, you can even practice only GST. Because for the amount of time you have to spend on the GST will be much more than any amount. So you can specialize on GST. Because there's an audit also there. So moment an audit is with you, client will not move. Yes or no? So audit accounts by practicing CA, the problem is, there are 3 people involved right now. In what? In this. What are the 3? Who are the 3 people? The 3 people are CA, CWA and Company Secretary. And aggregate turnover of that, what? The audit becomes compulsory. I told registered dealer, I stand corrected. Not every registered dealer, registered person will get the audit. Just like a tax audit, where the turnover limits are fixed. What is the turnover limit for tax audit? 1 crore? 1 crore or more than 1 crore? 1 crore. So same is the case of your GST audit also. Now, how many years should you maintain? Now this question is irrelevant according to me. In case of the ERP system where everything is systematic, why do you need to worry about it? But the law says Every registered taxable person shall retain them until the end of 60 months from the last date of filing of the annual return for the next year, said year. Example, financial year 2017-2018, annual return will be submitted by December 2018. For example, for financial year 2017-2018, annual return will be submitted by December 2018. Books will be kept till the end of December 2013. Sorry, 23, 2023. Now, let's move on to the next area of discussion. These are all procedural, so here nothing to add value. But going forward, this is going to be an interesting thing. When is that you will be allowed to take the input tax credit? There should be some conditions. Yes? First, to take an input tax credit, you need to be first of all registered. You don't have an output tax liability, but you want to take input tax credit. Then you need to register. Hope you got the point. For you, output tax is not there. For example, your product is exempt, which comes under the 0% category. But you want to take the input. Can you do that? Yes, you can do that, provided you go for a voluntary registration. Meaning, just because only when you are selling a product which is taxable, then the registration comes as a mandatory. Only then GST is applicable. Yes or no? Don't have that notion. If you want to take the input tax credit, you can do that, provided you voluntarily register under the GST. Even if you are coming under less than 20 lakhs and later you think that you will actually exceed 20 lakhs, at that point of time you will not have an opportunity to take the credit that is elapsed. So if you are planning to grow your business, better go for voluntary registration. Anybody set to bound, today I start up a company, why should I not register myself? Register and start taking the input. That input will not go into exhaust. It's like a cash, which I can use while I come under the tax liability net. Hope you got the point. So for that, what is the primary condition? You have to get registered. Hope you got the point. Second, when a registered dealer ceases to pay tax under the composition levy, take credit of input tax on stock. For example, who is the composition? When a registered dealer ceases to pay tax under the composition levy, take credit of input tax on stock. What does it mean? Any idea? For example, he need not pay taxes on that stock portion. Whatever is there, he can take the credit. Hope you got the point. Yeah, that is allowed. The entitlement of input tax credit. When a registered dealer ceases to pay tax under the composition levy, take credit of input tax on stock. It is possible. I will explain that with an illustration. Partial use for business and personal purpose, then proportionate. These are all there in the SENMAT itself. Yes or no? Which tries to be carried forward here. But this provides a kind of a clarification. Why I am saying is because when you use the same services for personal level also and for the official level also, that proportionate amount has to be taken. How do you find the proportion? So invoice has to be cut in two ways. Invoice is the fundamental thing based on which you take the input credit, and every invoice is for the inward supply. Yes or no? So when there's nothing called personal. When it's personal, you need to write an invoice which will not be accounted at all. What is personal in this? When you do a business, the personal is the personal expense of the promoters or the business people. That hereafter what they will do, business people, is they will not take single invoice. If you take a single invoice on the personal component, you cannot take credit. And when your invoice has to be uploaded, mismatch will come. Then again your input tax. So it is better to, when you enter into the contract, say very simply, why should you incur a personal expense in company's name? Company is run for company. If your personal expenses, draw out salary and use it, or book expense and reimburse it, right? So these are the things that, or they will go for a reimbursement model, where they will incur it and then take a reimbursement. Hope you got the point. It will be considered as a business expense. You will take the entire credit. Later, they will take the reimbursement. Whether this planning is possible, time only has to tell you. Because the entire reason why this is brought is, they want to deny the credit of personal expenses. But if you are going to account it as an invoice, take the input credit and later take that person who spent it, who used the personal expenses, if you are going to getting reimbursement from him, what happens to this input tax credit is a question mark. Yes or no? So these are the issue. If you cannot plan around GST, just follow what GST says. Don't ever use your planning ideas. Planning ideas are perishing around the world, including the Apple, Google's, Amazon's are under scanner. For the Apple today makes so much of sales. They're a big company. They don't even pay 1% of the taxes. For example, Google, they don't pay taxes. They earn in billions. They pay in millions. If they earn in billions, ideally the tax should be in billions. But they pay in millions. International taxation. They actually go around the world. Not only people travel, money also travels. The tax havens. And because of that, they're not able to. The US government lost money. Only when the problem in the US becomes problem, that becomes a problem of the world. And when the US Senate actually called the Apple CEO and investigated the matter, Apple CEO went on to accept it. Yes, we have the structure in such a way that you have to watch the debate, what happened in the US, all this matter, tax investigation. They have something called double Irish, double sandwich. That's not a eating item. That is a international taxation planning item, where they route through different tax havens. Ultimately, they are not paying taxes anywhere. You would have heard about Bermuda, where when the plane goes, it gets disappeared. Profit also gets disappeared if it goes to Bermuda. So this is the kind of a model what they do it. This, to encounter that, the OECD came out with something called BEPS plan, base erosion profit shifting. And this base erosion profit shifting is an international agenda. Even the Modi government is actually adopting that base erosion profit shifting to implement in India. At the end of the day, India is also eroding the we also have the concern that our profit should not be eroded, so that the tax base remains here for the MNC company. We are promoting an MNC company here for what? We are promoting MNC company here for the employment opportunity, 2 for collecting taxes. They do all the business here and you make them to escape the profit from here through transfer pricing you charge, and it goes to other country. What will happen? The taxes are eroded. To ensure that you safeguard, India is also adopting the base erosion profit shifting. Who bought this? OECD brought this. Who bought the guidance for GST? OECD. India is not a member of the OECD. It's like a Cosmo club. To become a member, there are certain criteria which you have to fulfill. And for India is aiming to become that. India will only become it's a developed nations club. And why is this call of the BEPS came? The call of the BEPS came to ensure that respective countries' share of profit becomes a respective countries' share of tax also. So when the models are changing, when the taxes are changing on the value chain basis, don't plan anything. It's not going to be useful in the long term. Okay, maybe you should help the client on growth plans, not on the planning aspects on the tax, where don't interpret the law in such a way that the government brings an amendment in the next year and say it is a retrospective amendment. Okay, a lot of planning opportunity gets lost. That's the reason whenever you advise a client, you tell them as per the law existing today. We may not know what happens the next time. So these are the things that you need to know. So personal and business, keep it away so that under the input tax credit it remains intact. Now, where the goods and services are taxable and exempted, proportionate zero rate included. Change in the constitution allowed to transfer. For example, I am a company. Now I get converted myself into a partnership. I am a partnership, get myself converted into a company. I am a LLP, get converted into a company as per the Companies Act regulation I follow, and then converted. Then when I convert that, what is my status of my input tax credit is the question. That input tax credit which I availed while I was in the partnership, while I was in the LLP, is still can be carried forward under the GST also. And that is, after GST coming in, you are converting the LLP into a company, and the credit that is existing under the LLP can be converted into the company. That's precisely the point. In case of the goods against tax invoice or received in lots or installment, the registered taxable person will be entitled to the credit upon receipt of the last lot or installment. For example, you have some products which are dispatched over a period of time, right? So what the government says, if you want to take the input tax credit, the last of the lot should come and reach you. Only then you can take the input tax credit. That's what the government says. So now, don't think it's a bit heavy portion. That's the reason in input tax credit I brought it post lunch. Meaning, so we will do it again. Don't worry about it. It's not one day affair. Tomorrow also we'll summarize it so that it becomes easy to for you to understand. After the expiry, when is that input tax credit will not be entitled? The first condition that you need to see is after the expiry of 1 year from the date of issue of tax invoice relating to such supply of goods or services. If it expires requires 1 year. You raise an invoice. You raised an invoice, and the date of issue of tax invoice relating to such supply of goods or services, it exceeds 1 year. Then you will be denied the input tax credit. Very simple. Year after, you cannot raise invoice and deliver the goods at after 1 year. If you raise an invoice, why should you raise an invoice? To sell a product? Yes or no? Why did you raise an invoice? And government says we are okay. You raise an invoice, you sell you transfer the product up to 1 year, no problem. But before 1 year you transfer, otherwise input tax credit will be denied. So will anybody takes the risk of raising an invoice now, booking a revenue now? What was happening? This year, next year revenue you book this year. Next, after that years, next year. Like that, 10 years revenue, you do, for example, every year you are preceding the revenue, yes or no? Just by raising invoice. Now that story will not work out. Why? Because input tax credit is denied. Alright, next. Motor vehicles, except when they are supplied in the usual course of business, are providing the following taxable services: transportation of passengers, transportation of goods, imparting training or motor driving skills. The motor vehicles, whatever the amount you spend, other than for the purpose of transportation of passengers, that is bus facilities and all, other than the transportation of goods, like your logistics provider, yes or no? Logistics provider. 3, imparting training on motor driving skills. Somebody is running a driving trainer for the drivers. That companies will be, except those companies, all other people who use the motor vehicles will not be entitled to input tax credit. Goods or services are used primarily for personal use or consumption of any employee. Now this is a very controversial point. First of all, have you seen this kind of a transaction in any company? Yes. Goods and services are used primarily for the personal use or consumption of any employee. Employee can be your CEO also. Yes, an employee that CEO buys a car. Let's assume he does not bring the car to the office at all. This car, what he bought in the name of the company, is being used by his wife. Right? Goods or services. This is a capital good. On capital good, input tax credit is there. He already has 3 cars in the name of the company. Fourth car is buying, and he's giving this car to his wife to use this car. Purely that car is not definitely useful for the business. Yes or no? That means it's a personal car. And in the personal car, it will be personal car. It is a non-entitlement of input tax. But now you will ask me, how will the department find? Yes or no? If I have 10 cars or if I have 15 cars, how does it matter? How will the department find? That's precisely your question. That's where they have to evolve. That's where they have. Until now, they were not able to find. They are all very busy managing. Yes or no? Meaning the charts were not there, taxes were different, and they don't know what to do. But now, going forward, it will all streamline. These transactions and all will be scanned and scrutinized. Because ultimately, you are charging to the company, and input tax credit is there. You have to pay taxes. Tax is not exempt. If you buy a product, capital good, for example, you buy a car, you will pay taxes. It is not exempt category. But the car you are using for the company, then only the input tax credit will come. Car, you buy a BMW car, you capital good, 50% in the first year and 50% in the second year, yes or no? That portion will not be allowed provided you use it for a personal purpose. I am saying by looking at the substance of the transaction, not the legal form. You are not actually using for your official purpose. Your wife is only using for going to vegetable buying shops and things like that. Then that car is not even coming to the office, and this denial of the credit might happen at any point of time. Now the tax practitioners are moving out from the legal form to substance form. Please understand, they are coached like that, and everything whatever the tax officers are going to do is going to be based on data analytics hereafter. So they'll analyze the data. God and data are the only 2 things they're going to believe in the future, entire country. So God is not going to be alone. God is going to be accompanied with data going forward. Who is this man? Show his data. Google track record. Okay, so data is so much. Don't think that everything is secured. I will give you some websites you can go and check. Just put that website and put your email ID. They will tell you how many times your email ID has been compromised in the international level by the attackers. and they have tried to send you the mail saying that somebody is trying to attack your thing, LinkedIn profile. Go and check. Somebody would have tried actually. These are all automation. These are all machines which do the attack through the malware or whatever. Ransom. Why ransom? And you know which country got affected most? India. Why? India is the #1 country for the pirates. And whichever pirates you cannot save. What the government or any organization can save is only the original software. You install a pirate, and when your pirated software gets locked, definitely you are the victim, and you have to pay so much for the ransom. And when they know it is pirate, it's like double-edged sword. You can neither tell outside, you can neither get money. So it's a double-edged sword. So the days are come where you have to systemize yourself. Then food and beverage. Okay, they have given the list itself: food and beverage, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, health services, membership of a club, health and fitness center, life and health insurance. These are all the primary things. The car example also squarely applies. Squarely applies because they are not dealt with the capital goods. These are the things which squarely apply. Now, in the name of the company, the man director will be in all the clubs. Yes or no? All the clubs he will be there. Yes or no? And all the clubs he will be subscribed to the fitness center. None of the fitness center will go. Money will go. Yes or no? For a privilege purpose. Okay? These things will be denied credit. Because it's for the personal. When I say personal, how do you define personal? For all employee, if it is provided, it is not personal. If only particular sector employees are provided, again to define personal is difficult. But if a particular person is doing it, that means personal. Hope you got the point. It is denied. It is denied. You are right. His question is, now employee, for example, the companies provide free lunch to the employee, and I told free lunch attracts GST, and that GST you pay. Now, that GST what you paid, it's a denial of credit. You might say, yes sir, it's furtherance of business. Yes, furtherance of business only, it got attracted. Then why do you say now the denial of credit? Act says, I'm not saying. Law says, I'm not saying. Ideally it should be allowed, but the act says no, that's all, no, that's all. Alright? Now, then, goods and or services acquired by the principal in the execution of works contract for construction of immovable property other than plant and machinery. I repeat, goods and services acquired by the principal in the execution of the works contract for construction of immovable property other than plant and machinery will the entitlement of non-entitlement input tax credit. Goods or services acquired by the principal in the execution of the works contract for construction of immovable property other than plant and machinery. Only on plant and machinery you will be allowed the input tax credit. That means all other portion on which you are buying the input tax credit will be denied. We will see the business, this has to be applied in the business sector. We will do it maybe tomorrow we will do it on a very summary form. Yes, definitely real. But real estate is gaining. According to it, they are gaining 12%. Look at the old scenario. It is rationalized. VAT and confusion was there. VAT is applicable, service tax applicable, abatement on labor portion, material portion, yes or no? These and all should go away. Refund of tax. Now you paid a wrong tax. Now, before I get into the refund of tax mechanism, let me explain about a small scenario. Instead of paying IGST, you paid CGST and SGST wrongly. What is the recourse available? What is the recourse available? Any idea what should be the recourse available? I'll tell you. In case if you have paid the IGST in the place of CGST and SGST, or in case in the place of CGST and SGST you have paid the IGST, wrongly invoiced, and you paid the amount, government will not say no. Government will accept. After accepting, government says, after that you found the mistake. Then you come back and you wanted to revise. Okay, government says, first you pay the CGST, SGST, then apply the refund for IGST. You got the point? So government says, you wrongly paid IGST. You expect the government to return back the money to you and then pay the CGST, SGST. No, government says, you first pay CGST, SGST, then come back to me, I'll think about giving. That's called refund. Now, how much time does refund take? Refund to be claimed by making an application to the proper officer of IGST, CGST, SGST before the expiry of 2 years from the relevant date. So, refund to be claimed by making an application to the proper officer of IGST or CGST or SGST before the expiry of 2 years from the relevant date. Hope you got the point. So, before 2 years, if you don't apply for a refund, after that you cannot apply to the department. You told your employee to apply for a refund. He did not apply. He kept it in a desk and he went off. New employee came in. He never minded about it. 2 years went away. 2 years, second month, if you go and ask him for the refund, you will be denied the refund. You know why this margin is fixed? People went on to ask the refund after 5 years, 6 years, and they want to. There's a tax uncertainty. The revenue uncertainty for the revenue uncertainty for the government goes away. Whatever they have collected, they are not repaid, as if they are not, anyway they are not paying. That's a different issue. It will take time. But here, in this case, they are fixing that if you are not claiming for the 2 years, that means third year you cannot come and claim. Got it? So this is the refund mechanism. Then refund will be given only for ITC claim in case of export and in case where the credit has accumulated on account of rate of tax of input being higher than the rate of tax on output. Now, refund will be given by the only for input tax claim in case of export. What happens, for example, there's a place called Tirupur in Tamil Nadu, you know? Okay, whatever the t-shirts you are wearing, it's all manufactured in Tirupur. No sir, I'm wearing Reebok, Nike. For information, Tirupur, it gets manufactured, it goes to Sri Lanka, then goes to South Carolina or North Carolina, and from there it goes for branding and comes back to India, and you pay 1,990 thinking that it's imported. I know the manufacturer who is manufacturing Nike. Exactly the same piece what comes as a latest trend. They call it as a yearly trend and all, right? So the season sale, the season product, campaign product, they call it as a campaign product. All this campaign product is manufactured by Tirupur. The designers are all our Indian designers. And they pick one thing and then say it's a campaign model, and then that becomes a famous because brand is there. Now, this Tirupur accounts for about 40,000 crore export of India. 40,000 crore export of India. The highest tax collection, if you think it's in Gujarat, no, it's in Tirupur. Tax collection, commissionerate, in the commissionerate I'm talking about, not the state. For state, the state has to develop. But I'm talking from the commissionerate perspective, income tax commissionerate perspective. 600 crores the collection of the tax. You know how this business operates? This business operates only through export. They don't have internal market. Is the Nike company here for which they are exporting? No. They export to Europe. All the brands, you name any brand, Reebok, Nike, Adidas, any brand, premium brands, these are all manufactured there. Now this company, this business, the export is exempt, yes or no? They get a duty drawback, right? Now the ITC claim refund, let's assume that companies are in the export, they have to apply all the documents within how many years? 2 years. Their business process has to change now because the cutoff date is there. Earlier, at any point of time they can go and apply for the refund, yes or no? But now the fixed duration is 2 years. All right. Then, in case where the goods are exported out of India and are subject to export duty, no refund can be claimed. In case where the goods are exported out of India and are subject to export duty, no refund can be claimed. Why? The entire reason on tax being levied on the products that are exported is to curb the export of the particular product. Now if you want the refund, it is like, what is the use the government actually impose the tax? All exports are not coming with export duty. Certain products are not allowed to be exported. They don't want that product to go out of India. Accordingly, maybe sandalwood, I'm not sure, sandalwood is exported. Is it exported? Any idea? Is there any product you know which cannot be exported? Because I have Farad, I know that potash cannot be exported. But is there any other product? Ivory? Yeah, you are right. So anyway, not that you have to pay the duty and then send the ivory. Ivory is restricted. I'm saying there are products for which we need to pay excess duty and you can take it. But government says, I'm already curbing it. By you taking the input tax credit on that, I'm actually giving a concession, yes or no? That concession portion they are not giving. Coming back to the Tirupur example, under the Tirupur, what is the implication? This is an export market. For Tirupur, under the GST, they don't have any implication other than for their inputs. Reason is, they export, pay, and then take a duty drawback. Now, the duty drawback amount is the equation of your price, yes or no? And the price is the equation of what? Your factors of production. And the factors of production will involve what? Input tax credit, yes or no? That's where all the Tirupur people are learning the GST. Not on their final product. GST is not applicable to their final product because under the GST, under the export, GST doesn't get attracted. I hope you got the point. Alright? Then, now, this is a case where we discussed the taxable person who had paid CGST, SGST on a transaction considered by him to be an intrastate supply, but which is subsequently held to be an interstate supply, first need to pay the liability of IGST and then claim refund of wrong tax amount paid. Wrong tax amount paid. So you got this point? Now instead of you paying IGST, you paid CGST, SGST. Government says, I am not responsible because I am not bothered. My portion of state tax I want. Please pay that first. Show this challan and then get the refund from there. This will affect your cash flow, yes or no? Severely it will affect your cash flow. If the mistake will cost you a cash flow. And cash flows are cash flow is the primary thing for running a business, and you know better. When the company will suffer, when they don't have cash. When I say cash, that means bank balances to run their business. And sometimes people run the business using their what? Demand loans, overdraft. And when you have to pay taxes, sometimes you use the overdraft facilities also, sometimes you pay taxes, yes or no? Not this tax, anyway you collect this tax and pay. But in this case, you have to first pay and then get it. You got the point? Yeah? Motto. See, very simple. I am paying IGST. Where is the state's share in that? I am paying, in case of the place where I have to charge IGST, I have charged CGST and SGST. Why should you give to the state? You should go to the state where the consumptions happen. It will be through the GST council. Appropriation should happen. But you have given the share to the state government. So that is the reason the government says. The reason why say you first be responsible when you prepare the invoices, what the government says. Otherwise you bear the problems of non-compliance. Hope you got the point. Ideally this situation should not arise because everything will be automated over a period of time. Everything will be automated over a period of time. And only thing you need to check carefully before sending to the system. Next. Documents as evidence. Microfilm or reproduction of an image of a document. Like you are for taking the input tax credit. A facsimile copy of the document, printed material produced by a computer, computer printout. Computer printout should be from the computer being used regularly to store and process information for any activity regularly carried on over the period, even if multiple computer software are used, will be considered as one computer. Now, what is the exact explanation for this? For taking the input tax credit, the evidence can be microfilm or reproduction of an image document. Going forward, maybe in the transition provision, yes. But going forward, will you have all these options, microfilm, image of a document? No, right? Reason is, whatever the products you purchase, that will come as an inward for you. Yes or no? When it comes for inward, you will take the credit, yes or no? So here they talk about it in the transition side. Later, inwards will give you the details for taking the input tax credit. Hope you got the point. At that point of time, invoice, what you got from the supplier, will be the invoice based on which you will take the input tax credit. It is a transition provisions for which we saw here. Now, first thing, transition provision, amount of SENVAT and VAT credit carried forward in a return to be allowed. Admissible as input tax credit under this act. Somebody asked me, sir, in the interval also, sir, I have a VAT credit, what will happen? Nothing will happen, don't worry. It will be there in your new GST Act. Okay, what logically where it should go? Which bucket it should go? Which one? SGST. Okay, I have tried to explain that. So balance portion as per the return filed, SENVAT portion, input VAT, allowed as input tax credit under the GST. transition provision. Unavailed credit, SENVAT credit and VAT credit on capital goods not carried forward in a return. Unavailed SENVAT credit and VAT credit on capital goods not carried forward in a return. What is your opinion on this? Everybody is with me? Yes. 50% credit not taken. Morning somebody asked me this question. We were discussing in length about it. Okay, the 50% portion. Now when you buy a unavailed SENVAT credit and VAT credit on capital goods not carried forward in a return, what does it mean? Now, I purchased a machinery in the current year. I took 50% in the current year. Balance 50% I did not take. That balance 50% the government says, you please take it immediately in the transition portion. Is it not the benefit that the government giving? Yes or no? Okay, why? In June 20th I bought an asset. I took 50% because first year you can take a 50%. On July 1 your transition provision is happening. Yes or no? Government says no problem. You purchase now only, but you purchase the old regime. 50% you already avail, 50% you avail, no problem, take 100%. Hope you got the point. Clear or not clear? Alright. Then, under current statute, SENVAT and input VAT is allowed as an input tax credit. It is administered as input tax credit in GST. Next, I will take up the question shortly. I will first finish this. I will take up the question. I want to take up questions also today because we are closing at 4:30. So I want to plan in such a way that I want to take some questions also. Because without taking questions, there is no purpose of actually proceeding. Well, a lot of questions should be there. We have a mic, hand mic. Make it ready. Hand mic. We will pass on that. Alright. Now, transition provisions. Credit of eligible duties and taxes in respect of inputs held in stock to be allowed as ITC. Yesterday somebody asked me. So stock, there is a input tax credit portion. What will happen to the stock? You will be allowed to carry it forward. Scenarios. A registered taxable person who was not liable to be registered under the earlier law. Now, registered person under this law was not required to register under the previous law. How and all we will discuss later. He was exempt from, for example, excise duty. For VAT also he did not come under the turnover. For sugar. Now, in this case, what will happen? Who was engaged in the manufacture or sale of exempted goods? Provision of exempted services, he need not register under the old structure. First stage dealer, second stage dealer, or registered importer. Now, condition. The registered taxable person who was not liable to be registered under the earlier law, the closing stock held must be used or intended to be used for taxable supplies. That's one of the condition. Second, pass on the benefits of such credit by way of reduced prices to the recipient. If you are going to do that, then we will allow it. Then, you are eligible for input tax credit under GST. You should have invoices or any other primary conditions of what is the eligibility condition for taking the input tax credit. The documentary evidences should be there. Only if it is there, you are eligible to take the SENVAT credit portion. Then you should also have invoices and any other prescribed duty or tax paying documents for the closing stock. The date of invoice or any other prescribed duty or taxing documents must be within 12 months from the date of transition to GST. So the date of invoice or any other prescribed duty or tax paying document must be within 12 months from the date of transition to GST. That means the credit what you have, what you intend to take on a new regime, if at all you are taking under the new regime, invoice under the old invoice format, the invoice should be within how many days? That is 12 months, 1 year. Yeah? Then, now this is an important thing. Credit of eligible duties and taxes in respect of input services received on or after the appointed date, but the duty or tax in respect of which has been paid before the appointed date shall be allowed as a credit. You got this point? No? I'll explain you. Credit of eligible duties and taxes is in respect of input services received or after the appointed day, but the duty or tax in respect of which has been paid before the appointed day shall be allowed as a credit. Meaning, what is the appointed date? 1st July. What does the act say? If you have paid the tax amount before what? 1st July, that portion of credit you are eligible to take. that you take and transition to the new system. You got the point? Okay. Provided invoice or any other duty tax paying document of the same was recorded in the books of accounts, such person within a period of 30 days from the appointed date. 30 days from the appointed date. That means by default, how many days it becomes? So the invoice would have received by before 30 days. Credit you would have taken before the appointed date. That doesn't matter. That will be carried forward. So, but you cannot take credit after the 1st July for the invoice which is pertaining to 30. You got it? You missed taking the credit in the old system for the payment which you made in the old system. Can you go to the GST and then say I made the payment in the old system? Can I take the fresh credit right now under the GST? Not possible. Hope you got the point. It goes like this. Under the old system, the invoice is raised, you got some inputs, and then before the appointed date, you took the input and you also credited, no problem. That credit will pass on. You have an invoice, documentary, you accounted. Then later, after 1st July, you want to take the credit. Is it possible to take? No, it is not possible. Whatever credit you have to take under the old system will go under the old system. Provided you take in the old system, in the new system you can push it. But you cannot come into the new system and say, there I paid excess duty, now I'll take credit under the GST. No, that will not be allowed. Hope you got the point. Now your clients are there while you are going advising, the last 30 days bill will be there. No. Tell them to account it fast. Why this situation will arise? When you are irresponsible, which most of the business people are. Because they unnecessarily delay, it is a big opportunity. Yes or no? Business people ask, this is what you should give as a value to the business people while you meet a client. Tell them, look, whatever the credit that is available on 30th, please avail the credit. Availment of the credit is under the old system and then pass on to the new system, transition provision. If you are not availing under the old system, it's a denial under the new system. Hope you got the point. The bridge is the appointed date. Before the appointed date, please take the credit of all your expenses, and post appointment date, you don't have an opportunity to take the credit under the position. Only the transition is there, pushing is there, converting is there. So before the appointed date, please do it. Hope you got the point. Same concept. Okay, composition scheme, coming back. Yeah, this composition scheme. Composition scheme to regular dealer under the current tax law, tax invoice and other documents are prescribed evidencing payment of duty and tax under the earlier law. So you need to have the evidences to take the credit under the composition scheme, under the earlier law. Now, what is this composition? Under the earlier law, you had a composition scheme? Yes or no? In the earlier life, I have been in the composition scheme. When you have taken the credit under the composition scheme, that composition scheme credit also will be applicable under the new GST. You might say, sir, I am not coming under the composition scheme in the present law. If I don't come also, whether it can be carried forward? Yes, you can carry forward. Hope you got the point. Under the old taxation structure, you have been under the composition scheme. What is composition scheme? You pay little tax and get out of the compliance, yes or no? But input tax rate will not be allowed. That is the case now, but there it was allowed. Now, what are the credit that you have availed in case of the composition levy? That can be taken, it can be carried forward to the new system, even if you are not combined with the composition levy. Hope you got the point. Clear or not clear? So, see, input tax rate is a heavy portion. That's the reason I given another material also. So tomorrow we will revise it with an example. This is just an overview. I'm just running you through the complexity so that you have a separate book which I have given called transition provision. That will be a separate examples and separate discussion tomorrow, which I am planning to do tomorrow. This is just an overview. Okay, goods in transit. Now, listen, in the current month, that is July 1 is the appointed date for transmission, that is moving to the new GST arena. Now, the goods has been dispatched on 29th. It's in the transit. What is the status of that? So, payment of duty taxes before the appointed date, invoice need to be accounted within 30 days from the appointed date. So, if for example, before the appointed date, you are sending the goods, and accordingly that that credit you have taken, the goods are in transit, and it reaches within 30 days, and before 30 days you have to take the credit. Hope you got the point. For example, 1st July is the GST date, and the goods started transmissioning from 29th onwards. It's still in the transmission on July 1. Government says it's a special case. In the first time transition, we will allow you to take the credit up to 30 days of what? Invoice need to be from within 30 days you have to account the invoice. When I say account the invoice, you have to account the invoice and account the credit also. When I say invoice, it goes along to the credit side. Okay, then goods in transit, capital goods, before the appointed date. No credit will be available as per the revised draft, not revised draft model law, under the GST. Now, close the door. So, goods in transit. Now the capital goods are in transit. What I told earlier was the invoice, normal goods. Now if the capital goods are in transit, for example, June 27th, you dispatch the capital goods. This capital goods reaches the purchaser only on July 3rd. Let's take an example. Now what happens to the credit of this capital goods? I didn't change it, not revised model law. As per the GST Act, this is denied. Sir, what is this? Don't ask me any reason. I don't know. So that entire 100% goes for a toss. For example, you go purchase a 40 crore machinery, and then 40 crore machinery attracts the earlier regime. That tax portion is completely goes for a toss. We will discuss. These are some open issues which I am opening. I will tell. Yesterday we discussed it, and then from there I will give examples. Okay, there are mathematical examples which is there. I will explain that in the second portion. Now, ITC available on other taxes paid. VAT dealer, excise paid with invoice, excise suffered, goods purchased where the dealer is not showing excise on the face of the invoice. Excise credit will be available at the rate prescribed by the GST. Inventory valuation is critical, use FIFO. Credit available only for stock sold for 12 months prior to the AD. Don't confuse yourself. For example, I have a stock. On the stock value, we would have paid, excise duty will not be visible. Yes or no? On the stock, excise duty will be visible. You are a dealer. You got the product from a manufacturer, FMCG company, consumer products company. Now you are selling a washing machine. That washing machine what you are having, you got it from it's in the value chain, manufacturer to wholesaler to retailer. Now whether the retailer know what excise duty component he has paid? No, he will not know. Similarly, wholesaler, will he know? So it will be credit taken, and whatever is adjusted will be included in the costs. Only VAT is shown outside. Yes or no? Yes or no? In none of your invoice, it will not be shown. Now in that case, but still the excise duty is there inside. Got the point or not? The excise duty component is inside, and VAT is also inside, which it is not visible on the invoice. That's where inventory valuation has to be done for again. Hope you got the point. Next assignment that will come to your hand is, if there's a big company who has stock in place, so go around in the city of Ahmedabad, go to the warehouse guys, check if you want. I don't need to teach to Ahmedabad how to do business, but still, you go to warehouse guys, ask them the list of which company is having more stocks. Just call the finance guy and tell this information. He will immediately appoint you for verification and also valuation. Valuation of what? That component of excise duty is not visible. Now it has to be opened up. Otherwise you will be denied the credit, yes or no? The benefit will go away. Whatever the excise duty you have paid, but it's imputed as part of your cost, will not be available to you, and the VAT portion has to be rationalized. So for that the excise has to be done by you. I'll tell you at the next, that's what, these are all heavy things, but try to understand. There is an assignment which will come to you to ask, under the old regime, what is the, at least if the dealers are not calling you, manufacturers will call you. Manufacturers will call you on the stock. On the stock. It's not easy exercise, no, they don't have proper records. So they're going to call you to check, we have a stock in my warehouses, please come under the old excess duty is there, how much I have paid, custom duty is there, as a situation to new situation. So there's a credit available, Senvar credit available on the stock. You have to segregate the Senvar credit portion of the excess duty and segregate the and the VAT component, and then look at the transmission to the new Senvar credit under the new input tax credit portion. The no credit on CST will be available. Avoid stocking goods purchased from interstate. Now, don't be hurry-burry in sending all your goods to other states. Waste. What will happen? The CST what you pay will not be, it is not being credited. And when the GST is going to come, you have to pay GST. So, you have to plan in this current month not to have movement of goods unnecessarily. Unnecessarily don't have movement of goods. How many businessmen will know this? You will be still staking for selling for another 3 months later. Yes or no? It is better to sell later. When? Later, when the GST is going to come, push the goods to the branch, you will be able to take credit. Yes or no? But now when you pay CST, in case if he is paying CST, if it's not a branch transfer and keeps there, it's that the credit is not allowed. Anyway, it's a cost. Yes or no? All right. Then, job work. If goods are returned within 6 months, can be further extended by 2 months from the appointed date. No tax is payable. If returned after 6 months, input tax credit to be reversed without availability of credit. This is applicable only if principal and job worker declare the details of inputs held by the job worker. Now, there's a very, very important thing. Many people, garment industry will use this as job worker. Yes or no? Now, this is a very important thing. Even if you have missed out all the things, for Ahmedabad, this is very, very important. Most of your clients will come under. Now, for example, how does the job worker operate? The job worker operate where the main manufacturer will give the raw material or the products to actually manufacture to the job worker. Who is actually purchasing it? Who is purchasing it? Main manufacturer is purchasing it. What is the job worker doing it? Job worker is taking that and manufacturing and returns back and takes what? Conversion charges. Or they used to take what? Commission or conversion charges or whatever it is. So you pay them for the job work what they do. This job work, whatever the credit that is available, you would have taken a credit for the materials what you have sent to the job worker. That credit to pass on in the new regime, you should receive the goods within 6 months. Got the point or not? If you don't receive the goods within 6 months, it can be extended by further 2 months also. If you are not receiving the goods within 6 months, then the credit will be denied. Even under the new regime. Now let's assume first case 1, where you transferred the input to the job worker before 5 months. On July 1, 6 months gets completed. Product should have come to you. Yes or no? Then the credit is allowed and it came back, credit is allowed for you to pass on under the GST. Now, job worker was given the inputs and everything in this current month. How many months more to go? How many months more to go? It is 6 months more to go. Now that input tax credit, what is there, which the materials what you supply to the job worker, you have taken the input tax credit. That input tax credit should ideally get transformed to the new regime. It will get transformed, provided the goods comes back to you within how many months? 6 months, and it can be extended to how many months? 2 months from the appointed date. But however, if you are not receiving, what will happen? The denial of credit will happen for what is allowed under the GST. Hope you got the point or not. It's very critical and most of your clients will have. Yeah, he asked for the two job worker, 6 months is counted separately. Alright. Then, upward revision on contract value post GST and GST chargeable. Now, the contract gets revised. In case, when the contract gets revised, upward revision has to be made to the clients on which you will be allowed the credit. For example, now you are revising the contract, and after you revise the contract, because of that, your outflow of the liability, that is whatever you pay, and you take credit increases. That increase in the credit can be taken by you. Hope you got the point. Here, where, for example, you upward revision of the contract is you have a contract existing with the customer. When I say customer, you have a contract entered with the customer, and you have billed the customer, but you are revising the contract. Still not delivered the supply. You are not provided the you are not supplied the services or supplied the goods. In this case, you are revising it and you are communicating to the customer. What the GST says is, yes, you are allowed to do that, provided you do it before the appointed date and the revision is communicated, you are allowed the credit. Hope you got the point. But post appointed date, if you are revising the contract, that will come under the what regime? New regime. For the existing contract, you cannot take the benefit. Hope you got the point. Alright. Then, downward revision. Adjust tax liability by way of credit note provided recipient receives the credit. Downward revision happens, then the excess credit what you have taken, no, that will not be allowed. That will not be allowed. Then, pending refund claim as per the earlier law will be disposed by way of a cash. Now, again it's an opportunity. Go back to your clients, check the pending refunds. If it is there, the department has to process it fastly to give in what? Cash. Hope you got the point? That refund claim will not carry forward under the GST regime. No sir, under the GST regime, I applied the refund at 4%. Now that particular product is under the 12% category, I will apply the refund for 12%. The existing law only will override the earlier law. Like that you cannot say. Government says, if you had paid the refund as per the old law, we are ready to pay the cash immediately. Whether it's a gain or loss, that's a different matter. That's the reason most of the people under the commercial taxes, my own clients where I advise the auto sector, went and applied to the commissioner refund claims, input tax refund claims of the VAT basically. So they try to get the service tax paid on advance amount and supply of service is made after implementation of GST. Service tax paid on advance amount and supply of service is made after the implementation of GST. Possible or not possible? Possible. That to the extent service tax paid on advance, GST will not be applicable. You got it? For example, you got the service and you paid in advance, and that advance portion 16.5% is applied. Now, that 65% will not apply for the balance portion. What will apply for the balance portion after the appointed date? 18% is applicable means 18%. 5% applicable means 5%. Hope you got the point. Now, it's a problem for Uber and Ola. I'll tell you how. They have something called, Uber has something called Uber Business. Now they opened. Where for IT companies, you must be aware. For IT companies and many companies where manpowers are there, nowadays manpower companies are not engaging in travels because it's very costly. Uber is there. They have something called Uber Business, and through Uber Business they book and they go. Who funds that? Company funds that because it's a reimbursement for them. Instead of these guys go and spend the money to travels and then come and claim a wrong number, more number, Uber Business says you can book us and we will enable that recharge to him, so directly the account is credited. Yes or no? Now this business, let's assume I paid advance for Uber. Advance means some portion. I paid, let's assume for a particular employee 10,000 rupees. That particular employee used the services of for worth of 5,000. But he will use the balance portion of 5,000 after the 1st July. Then what is the status of the balance portion services he receives? That service tax will be applicable is 5%. As against 16%. You got it? You got it or not? And now that is an input for the business. For which business? The business which paid it. The company paid to Uber. For Uber, it is outflow, output tax. In the invoice of the company, it will be an input tax because this is provided for the employees. Input services. That input services, how much the company can take? Advance amount, whatever the portion of service tax available, that they can take 16.5%. But whereas when it comes to the balance portion of from after 1st July onwards, where the rates are going to be 5%, the 5% only can it take. You cannot take 16.5%. Hope you got the point. It's not clear? Let me explain. Now, I am a company. I run a company. And there are employees, set of employees. And Uber, Ola is there. Now, the trend in the companies are, they generally, for example, Navkar takes me from the hotel to here. Earlier, they used to call a travel guy, he will travel from here, there, and then pick me up. Now, they book a Uber. The Uber guy comes and picks me up. So, there is no requirement of anyone accompanying. Now, it's the same, applying the same analogy. To company. Now what the companies do is, they pay money in advance. They pay money in advance. And when they pay money in advance, now in this transition period, there are two issues which can arise. The advance money what they paid, it is eligible for input tax credit. Yes? And now, balance portion of the services will be provided after the, let's assume, you paid the money of advance on 28th to an employee for the purpose of employee benefit. Then he was availing the services, and subsequent to that, also the money what you paid in advance is proportional to that period. Yes or no? An employee avails the services in that period. For taking the credit, you want the invoice. Yes or no? There are two invoices which is there. Before 1st July, that invoice will contain the old service tax. Credit will be for the old service tax, which you should have taken while you paid the advance. And here on the second, where you have paid the advance, but you utilized after the 1st July onwards, then what will apply is the 5% on which you can take the input tax credit. Hope you got the point. Okay, that's what the Act says. Alright. Contract with all inclusive price. New contracts need to be looked into. Clause to be added to factor any increase or decrease in the tax to be collected. So contract with an inclusive price, new contracts need to be looked into. Clause to be added to factor any increase or decrease in tax to be affected. Now go to a client. These are very, very important. These are the things you will get as an assignment right now. When the GST date is going to be 1st July, do you think that valuation mechanism and all will apply? First job you will do, check is your input tax credit should not get wasted. It's like a money, cash, yes or no? So that has to be transformed. Now, if your contracts are all inclusive, you have to revise the contract imputing the latest rate. If you don't revise the contract at the latest rate, you will be denied the credit, even though your invoice might state. Got it? There should not be consistency with your contract, has to be revised for compulsorily with a new rate. You go and ask all the clients now, everybody will say, I'm working on the contract to revise it with the, because rates are out. Now they have to work on revising it. And revising it requires signature, negotiation. So, and a company does not just have one contract. It may, a big company, it might have multiple products, multiple contracts. So looking at that, the contracts will get revised. Then agent holding stock prior to the GST. Now consignment agent is holding a stock. An agent will be eligible for input credit, and the principal need to reverse the credit. You got the point? Now let the consignment agent holds the stock. So under the GST, agent will be allowed to take the credit, and the principal has to revise the credit. Hope you got the point. Now we have gone with the only one of the boring areas, that is input tax credit. Okay, which I wanted to take up. That's the reason I want to take up tomorrow. But I still gave the highlights. Tomorrow, if I'm going to take, it will be much more difficult for you. Now that I have already highlighted the issue, there is a confusion going on in your mind, which will be resolved tomorrow. That's how it is. And don't ask me any question on input tax credit. You can ask me, I'll try to answer, but don't ask me right now. You can ask questions up to whatever we discussed before lunch. The quota for question is that, only that. And you can still ask me, but I'll answer, but you think from that quota. Now let's move on to the next. The most important area, don't think about the input tax credit after July 1 and all. That will be streamlined. Presently, the transition provision is what is difficult. That you are paid here, the advance is paid here. Then understand how mess is our business system. Yeah? So how messy is our multiple taxes. So these are all getting streamlined. Alright, now, impact area. And I would really appreciate many times when I go for the conferences and seminars on GST, the person who is handling the input tax credit is only difficult. He can never become a rock star in the presentation. Because he can never explain that easily. And people who come in the first session are the best. They will say, all, it's transforming and all, and then they move off. Alright? Last is also easy. Why? People will be hurry-burry to leave. Okay, so it requires undivided attention. Right now, whatever we're going to discuss is very important. Impact area. Now, what we should do is, when vendor management is very, very, very important under the GST. Just move away from your input tax credit hangover. We are moving to vendor management. Why vendor management is important? Until now, I can bet you none of the companies will have vendor master. I can bet you. And now under the GST, it is a compulsion. It's not a choice. Tell them to build the vendor management. First thing, review current vendor history to identify non-compliant vendors. Next, GST compliance rating for identifying non-compliance vendors. Identify multiple new vendors outside state. No CST registration, no C form, and it's a national market. So no problem at all. Don't worry hereafter. You can engage any vendors because wherever you're going to buy, it is the same. Earlier you are restricting to the domestic vendors or from the vendors from the cheap state. Yes or no? Hereafter, no CST, no forms, nothing. Everywhere it's a uniform market. It's a national market for you. The market is wide open. Competition is wide open right now. Earlier the competition was restricted because the VAT was determining things and you used to go and purchase there and 2% extra CST used to come. Now you need not worry about it. You can buy from anywhere. Only thing is the transportation cost. Otherwise, you can buy from anywhere. Alright. Then, conducting vendor education programs for unorganized vendors. Very important. And it will be an important source right now. As you attend this session, your clients will call you and say, sir, can you present on GST to your vendors? You will say yes. Don't worry at all. Just go and tell them how to register. Just go and tell them what is vendor management. Go and tell them compliance management. Then tell hereafter under the GST, vendor list has to be got. Then GSTR 1, GSTR 2, GSTR 3 you explain. By the time 2 hours will get over, they will be in full confusion, you will move. Okay. So, alright. Then revive price of all related party vendors to avoid dispute in transaction value. All related party vendors has to be noted carefully. You know why? Later, the department will come back and say, for case of a related party, your transaction value was very less and the transaction value was supposed to be more because transaction value is the value based on which you pay tax, yes or no? So related parties has to be careful, mapped separately so that in future when the department comes and asks, you tell them whatever is the product I sold to my third party is the same price I sold to my relatives also. Branch transfer. Taxability of branch transfer will impact the cash flow of entity, cash flow of business, yes or no? Now I already told you, for example, you are in Karnataka and you transfer so you are in Tamil Nadu and you transfer the products to Karnataka. Then it is a branch transfer, it's a supply. Supply, location of supplier, place of supplier. Place of supply is in another state, location of supply is in Tamil Nadu. Accordingly, IGST will apply. And IGST applies, you have to pay to the central government, it will be appropriate to state government. Now, this IGST is applicable on what? Branch transfer. Now, this branch transfer affects the cash flow of business. Let's assume you keep moving so let's assume you have 20 branches around India. And you store in a branch and you find that as per the analysis of your company, that 60% of the time when you store there, the products are sold after 6 months. Now, let's assume, now a client calls you as a consultant for GST. For let's assume a company, manufacturer. The main point you have to tell him is, for a branch transfer, GST is applicable. First you will say, how is it possible? You tell him that is GST. And then you tell him that when you actually transfer the product to another state, and you are very sure that the product will not sell for another 6 months, and they will know. Yes or no? They will definitely know. Nothing, how to know? Take the stock of warehouses. Put the time interval in which aging bucket. You know how to put an aging bucket in Excel, right? Put an aging bucket and you will see that if it is more than 6 months, that means under the GST, if they are going to continue the same practice, what is going to happen? 20 states you move the products and keep there for storage, and you paid the IGST already, and you will recover the GST only when you sell. Until that point of time, unnecessarily what has happened? Money gets locked. Yes or no? And accordingly, it is not advisable to have the movement of goods without any purpose. You got the point? Yeah, any doubt, Tarun? Anybody else? Any else doubt? Because you asked this question, I suppose. IGST, you did not ask, another person. So, for example, you transfer the product to another state. For example, you presently, if you go as a consultant, go to the company and ask for aging bucket. You find that 90% of the product is not sold for within 6 months. And why should you store the 90%? Instead, you can show in manufacture itself, no. Location itself, no. Because you are paying the IGST and you are locking the fund in the government. And when can you adjust this? You can adjust this only when what? You recover the tax from your customer. You knock it off against the input and then you pay to the government. So you have to plan everything in advance. Everything has to be planned. So the waste movement of goods will be restricted, or inefficient movement of goods will be restricted. Earlier, what was the case? CST anyway exempt. Quickly push and keep it there. Yes or no? But that is the reason the warehouse thrived. Here if the warehouses will not thrive, we will actually, it will penalize the clients from the, anyway you are not denied the benefit. You are anyway having the benefit. That benefit what you have is only the credit what you have, which cannot be used for any purpose. But however, if you are not paid IGST, that hard cash, meaning hard cash, the bank balance is there with you. Yes or no? 20 states, and you keep moving the states goods here and there, then it will become wasteful exercise. Hope you got the point. Yeah. So ensure that we actually have the proper efficient movement of goods. Then tax paid on stock transfer are fully available as a credit. Cascading effect is eradicated and product will be cost effective. You need not worry. Sir, I paid IGST. On IGST, CGST and IGST plus the cost of the transfer of the branch, then only CGST, SGST. Yeah? That means like that if you ask, no, whatever IGST you paid, you can take the credit. And from Bangalore, if you sell, Karnataka if you sell, you will sell at the CGST and SGST will be applicable on your invoice. You are clear about it? Alright. Then let's move on. No declaration form, no forms at all. Then with seamless flow of ITC, the need of number of branches may be scaled down. Clear? You have to close. Who will be worst affected? The warehouse. Warehouse business is worst affected in the GST. Next, impact of cross-branch transfers. Next. Now, impact of cross-branch transfer is very simple. Now, I'll tell you. I moved the goods from Tamil Nadu to Karnataka. From Karnataka, I'm moving to Andhra Pradesh. Is my scenario changed or is it fine? Scenario did not change. Yes or no? Multiple transfer of the stock also. You have to keep paying the. For example, you transfer the goods to Karnataka. From Karnataka, again you transfer the goods to whom? To Andhra Pradesh. Again, when you transfer IGST, you will get attracted. You have to pay, or you have already taken the IGST of the previous transfer. Yes or no? For example, in this current month, let's assume you move the products from branch to branch. What is the rule of the ITC under the GST? 1 month credit. Last month you take, this month you can avail. Yes or no? Let's take in the 1st July, you became crazy in the business. No, what you did? You send the product to Karnataka. From Karnataka, you send the product to Andhra Pradesh. From Andhra Pradesh, you send the product to Maharashtra. From Maharashtra, you send the product to Gujarat. Every time you kept paying. Every time you cannot avail credit because whatever the credit you avail can be used in the next month. Yes or no? So if you keep moving in the branches, who is getting affected? You are getting affected. Very simple. See, I transferred the product from here, the stock transfer from here to Karnataka. From Karnataka, I moved to within 1 month, everything within 1 month. That means credit availed whatever can be utilized against the next month. Yes or no? That's a condition of the GST. Now that you kept on moving the product in a month itself to several locations, every time when you paid the input tax credit, you never adjusted against the input. Whenever you paid the output tax, that is your IGST on the branch transfer, you have been taking, you cannot adjust it against the input because you don't have input. Yes or no? So because of that, what will happen? It keeps adding, you keep paying, thinking that the input tax credit comes, You will get the credit, but that credit, whatever you get, is the money which you would have used for any other purpose. Now you have this credit, whatever you have, the bulk of the credit has to be used only for tax adjustment. Your money gets locked. So it is advisable to reduce the goods in the next month. Okay, after the goods come, let's plan it. But next month, when I say next month, the July month alone will be a biggest Herculean task. After that, you send and then you take, no problem. Even after a while, you should not do that. Multiple taxes transfer, movement of the goods is not advisable. What is the destination? Send to the destination, so that it becomes easy. So all right. Return of goods sold prior to GST. Return of goods sold prior to exempted goods returned post GST. First, you send the goods, exempted goods, returned post GST. GST came in, there is appointed date is 1st July, and the goods are returned post GST. Before GST, what taxes you paid? Before the GST onset in India in July 1, what taxes you would have paid? VAT. Now that, what is the present act in India? The present act in India is GST. Now that when you are returning back, you already used the credit also. While you are returning back, what credit you will pay back? Removed or sold 6 months prior to the appointed date of GST. Returned within 6 months from the appointed date of GST. No taxes payable. Hope you got the point? No taxes payable. That's a benefit the government gives. After return after 6 months from the appointed date of GST, tax is payable. Now, 1st July comes. Within first 4 months, the returns, lot of returns came in. After 6 months, if the return comes, on that return, you have to pay what? GST. That return is also supply. Yes or no? Yes or no? The return is also a supply. Location and the place of supply will apply, and tax is payable. But this cushion of benefit is provided to those goods which is getting returned for the products which has been sold before the GST, but returned within 6 months of the GST. Hope you got the point. Taxable goods returned post GST. Returned by unregistered person. Removed or sold 6 months prior to appointed date of GST. Returned within 6 months from the appointed date of GST. Both eligible for refund. That is, returned by unregistered person. For example, customer comes and returns. Now refund has to be provided. Yes or no? That refund will be provided. For example, you got a new washing machine and it did not work, and then you sent it back. You are unregistered person to a registered person. Now removed, sold 6 months prior to appointed date. Yeah, removed or sold 6 months before the appointed date. Returned within 6 months from the appointed date. In both the cases, both the conditions has to be satisfied. 6 months before, within 6 months before the appointed date, it should have sold. After the 6 months of the appointed date, we should have returned. Both the conditions goes together, then it is not. It is eligible for refund for whatever the taxes they pay. You clear or not? For example, I sold before 7 months, but now the product gets returned under the GST scenario within 1 month. Then refund is not allowed. Before 6 months, I sold the washing machine, and the washing machine got returned post the GST coming in by before 6 months. That is before after. When I say before 6 months, it should have sold. After 6 months, after the appointed date, before 6 months, it should have come inside. Then the refund will be applicable. All right. Returned by a registered person. Return of goods will be considered as a deemed supply. Yes or no? And accordingly, tax is payable. Yes or no? On the return also, you have to pay taxes. There, the taxes paid is getting refunded. In this case, where registered person, when you return back the goods, let's assume retailer returns back the good to wholesaler. Then what will happen? Who is supplying? Retailer is supplying to whom? Wholesaler. What he has to pay? Taxes. So, That means hereafter you should ensure, if you have to become competitive, produce the product which is not defective. Care should be taken. Otherwise, what will happen? You send 1,000 pieces. 1,000 pieces gets returned. Who has to pay the taxes now? Retailer has to pay the taxes. Yes or no? Will he engage with you? He will say goodbye. He will not only say goodbye, he will file a case against you to recover the damages, whatever he has paid as a tax. Hope you got the point. What is the logic in this? Nothing. Don't think about anything, sir. What is this, sir? Yes, that's all. It is like that. So you don't question it. You got the point? Okay, anybody has a question on this? This point alone. Later we will take it up. I am just waiting. Oh, it's already time 3:30, so I wanted to take up the questions. Once again, let me complete this and then take up. Is there any question for particular this point? This point alone. Is there a point? Yeah. See, I am an unregistered person. I come to a shop, I buy a garment, cloth, and I go off. This cloth I purchased 6 months prior to the date of, I'm saying 6 months prior to the date of removed or sold 6 months before the appointed date, that is 1st July. Then return, it is sold to me, only when it's sold to me I can return back. The return I have to do within 6 months after the appointed date. 2 periods, appointed date, before, after. It is sold before and the cut-off limit is 6 months. And to be returning to that, from the GST perspective, when you return, government says from the appointed date, 6 months, if you return back, refund will be eligible. You will be eligible for refund itself. But if it is a registered person, the registered person got the goods or the product from the within 6 product from the product, and then subsequent to the appointed date he returns back. For example, registered person got the product and subsequent to GST introduction he returns back. What GST says? The GST says it's based on the supply, location of the supplier, place of supplier, and accordingly you pay taxes on the returns in case of the registered dealer. Registered person, you didn't understand? Okay, what is your name? Okay, now I'll tell you. I sell washing machine. Your question was related to second thing you clarified. Unregistered person, now you got clarified. After 6 months, no, nothing. You will not get a refund. Why? What is the concern? Why should the people return? When they return back, that refund has to be provided. No, that will be denied. You can return back. Nobody says I don't want. You can return back. Refund of money will not come to you. Who stops you from returning? Or throw it in the dustbin also. But the return, that refund part you are losing, no. This has to be educated or not to the business people. Second is even more. Second is the item which the business people will look at. What is this? Return when you get, it means why is the product getting returned? Whatever is covered in the warranty only you will return back. Otherwise you cannot even return back. Yes or no? And when it is getting returned back means quality of the product is not good. Now tell me which retailer will deal with a wholesaler who has a lot of returns, because he has to pay taxes on the deemed supply. Why is the government bringing it? Government did not say. I'll try to bring some rationale. Government is providing Make in India. Your products and all, whatever you purchase, you keep returning back. Yes or no? At least through this process, people will be conscious about the quality. Otherwise, they cannot do business because retailers will not purchase from you. Clear or not? Very important. You may not understand the implication. If you're a retailer, you will understand. Are you a retailer? Retailer? How many of them are retailer here? Where you trade products, buying from a wholesaler. Okay, what products you buy? Agarbatti returns, I don't know. But do we return back agarbattis? Okay, agarbatti is return back. Now does that agarbatti is coming under the tax net? Yeah, it's coming under 18%, no? Yeah, how much? Yeah, 12%. Yeah. So now it comes under 12%. Now our friend actually returns back the agarbatis. Then returning back is a supply. On that you have to pay tax. You got the point? Are you happy about it? He is not happy. That means, why are you returning back? Agarbati should be agarbati, but it's only a stick now. Everything came out. The quality was not good. Maybe that is the only reason you return back. Yes or no? Then that has to be penalized. Who has to be penalized? You have to be penalized. Because you are the person who was trading with him. Yes or no? You have not checked the quality. Yes or no? So because of this, the quality check will become serious in India. Hope you got the point. For agarbati itself, so much pain. Think about the products like electronic consumer goods and everything. Everything should become. Otherwise, extra liability. For the mistake what this manufacturer does, who has to bear? The retailer. Hope you got the point. Alright, then. Yes. This will be collected from the wholesale. It will collect it, but working capital issue. Yeah. Maybe he will give later. He will check and say, I will send it to the repairing. Okay, listen. No break and all. Listen, break is only at 4:30. Listen. Now, for example, I purchase a product. I was doubtful that this product is not working properly. I return back. Again it comes to me. Again I return back. Again it comes to me. 3 or 4 times I repair. That situation also comes, right? Then every time you need to pay taxes. Now he is asking, anyway wholesaler will refund. When he will refund? Only when he accepts the product is deficient, which very rarely happens. Yes or no? So that's how it is. Alright. Now I am open to the questions, then I will move on to the technology. Now whatever the question you have for the past 2 days, you can open up one by one. Mike will come to you, we will look at it and we will take up the questions. Whatever questions you have. This is a question answer session, 3:30 to 4:30. Tomorrow only I wanted to take up the technology aspects, not today. 1:10, yes, correct, exactly. We can have 1 hour of discussion, whatever question. Mike, what is it? Okay, anyway, you ask the question. Yeah. First is GST. Why should we refund? A return, yeah. Return. No, I'll tell you. So simple, you are returning, what is the procedure? I'll explain you. Okay, he is asking, sir, he's asking, he's a wholesaler, there's a retailer. Retailer returns back retailer purchased the product in August and he returns back the product in September. Very simple. When you sold to the retailer, you would have raised invoice on the retailer. When you sold to the retailer, when you raised invoice, depending upon interstate and intrastate, please listen, very important. Depending upon interstate and intrastate, you would have taken the credit. Now when the goods went to the retailer, it's an outflow for him. Sorry, you would not have to take credit. You would have collected taxes from him. And retailer, whatever the products he has purchased, on that he will take credit. Now when this gets returned, what will happen? The credit gets returned and subsequently the wholesaler has to refund your taxes. Yes or no? When you are returning back the good forever, there's a damaged piece. Yes or no? He has to return back. Now while you are returning retailer to wholesaler, that returning portion is a supply, and that supply, the place of supply and location of supply will apply, and based on that you have to pay taxes. You have to levy in the supply invoice itself the taxes and then collect also. Which rate? That rate what you got. Value of the product is the value on which you got. The wholesaler gave you a value, that will be the value. You will not put a margin and then sell them, no. Yeah? Yeah, reverse the credit. It's reversing. That reverse is not allowed now. What is allowed is you raise and then you knock off. That process allows. It is a cumbersome process. Okay, and you are asking, sir, why supply? Movement of goods want to be taxed in India. You got the point. So what is the, you will take care of the movements now, you will take care of the products now, otherwise you have to unnecessarily pay taxes. You will also double check before buying. Yes or no? In the retailer meet, if that person calls, you will complain also against the wholesaler. Yes, these are all the things that will happen. And streamlining the business. All right. Yeah, Mike. Yeah, you can. You can pass on. Next question. Yes.
Hello, hello.
Your point is your goods is in transit on June end. Let it be no. So goods post GST, your vendor sends you the product on which date? Tell me some date. No, you tell me exact date. So he sends you the 30 and when it reaches you?
On 3rd, next month.
3rd is September 3rd.
Yeah.
For August, when do you have to file a return?
For 10.
For August.
Sorry, August for 10 September.
10 September. So before that your products have come?
Yeah.
What's the problem?
But we received the goods in premise on 3rd September.
Let it be, no? How does it matter? What we are speaking is the transition provision. In case of your transition provision, your point is right. In case of after the GST onsets, you let the products be in goods in transit or not, doesn't matter. Why? Why doesn't matter? Tax is supply. Right? And I told you already, you change the business process to an extent where invoice and supply happen simultaneously. Reason is, outward supply is captured. Moment the September 3 when the product reaches the customer, he will capture the inward. Your inward and outward only will match. Yes or no? Like that. You can ask another question. I will tell you what question to ask. Okay, listen. I will tell you what question to ask. You can ask me, I sent the product. Okay, I sent the product. And the product, okay, you send the product on after 10th. After 10th. Now whether the reconciliation will happen. Exactly on 10th the product goes. Or 11th it goes on the reconciliation date. What is the problem? I don't have an answer right now. I myself got the question right now. Okay, I will check and come back. Okay, because of your question, I got the question. I'll check and come back.
And the second thing is that if we are receive the goods from job worker within a 6 months.
Which one?
Regarding job worker.
Job work,
Yeah.
okay.
That's a requirement to receive a goods within a 6 months to claim an input.
That is for again, for your transition provision. Yeah, even in the normal provisions, 6 months.
But if work is not done within a 6 month, we
Denial.
again receive and again give back to that.
No, he's coming to the points. The typical chartered accountant points. Now he's asking, please listen, very interesting question. He's asking, in the job work scenario, what is the job work concept? I'm a manufacturer. I purchase inputs. I send the products to my job worker. I provide the products, I provide the raw material to the job worker to manufacture. And then the job worker sends me, I pay him the commission charges or conversion charges, whatever it is. He's asking, sir, your point is right. Where it does not get returned within 6 months. Denial of the credit happens, yes or no? To whom the denial of the credit happens? To manufacturer. On what? On the inputs what you are sent. He's saying, if the job worker is not manufactured, why can't you take the return and again send it back so that the time gets extended? Then why do you deal with that job worker? What is your role? To give him again and again and then get back. You got the point what I'm asking? Are you there in the business to give him input? You will not manufacture, get back, manufacture, you will get back. I'm not sure. Business is not run for that. Why should you deal with him?
Is there any other circumstance regarding?
Unless you have so much of love and affection on him that you want to support him for nothing he does. So it is not possible. That situation is hypothetical. That situation is hypothetical. 6 months it should get manufactured. If you are asking me, sir, somehow some practical difficulty, 6 months it is not manufactured. 7th month the product comes. I will answer. That time, anyway, denial of the credit. You got the point. See, 6 months within that the job worker has to manufacture. Then only on that input what you have sent for the manufacture will be available for the credit. The question precisely is, if the job worker doesn't return back the goods within 6 months, he returned back on the 7th month due to practical difficulty. The 7th month manufacturing and sending back, you will be denied the credit. So time duration is very strict. All right? Yes. Then, and once again, 2 months can be extended. Yes or no? Discretion is there. Use that opportunity. After 2 months, what to do? So 6 plus 2, 8 months. I don't think there is any opportunity. All right?
Third is the furtherance of business. So if we are providing.
You are representing the entire crowd. Okay.
If company providing cab facility to the employees,
Yeah.
then it will cover. So input paid is
What services?
renting
Please, bit. Yeah.
cab service.
Cab services. Yeah.
Then we are eligible to take an input paid.
Absolutely. It is an input.
But in case of food and beverages, you said that the input paid is not.
No, I'm not able to get you.
Sir, for food and beverages, that free of cost food is providing.
No, that is not. See, please listen. He's asking. Now I have a company and I'm engaging with the cab, that is aggregators, Uber or Ola, and I give these services to drop them off. And then he's also asking the beverages what you provide for the employee, the beverages or the food, free food, comes from the tax net. This service what you give, whether this will also come under the tax, GST. As of the definition, yes, it will come. For example, for an employee who works late night, you provide a cab. Why do you provide that? You provide a cab for a furtherance of the business. You are anyway paid the tax too for availing the service from Uber. For providing this service extra to him, it may be asked by the department. It's still the things are not clear from the department.
It's free of cost, like food and beverages.
Exactly, it will be attracting tax.
We are eligible for input paid.
On what? No. Any furtherance of business of the employee you spend, that will not be eligible for credit. Denial of credit straight away. But the cab service you provided, no. For cab you paid, right? That input is available. For not for this FOC cost which you valued and you paid the tax. That's all. Okay, we'll take it off the record. Maybe some other persons, yeah. At last you can ask. Because we have to give opportunities for everyone.
Sir, in a rate, that is a stationary item.
Yeah.
Government covered under the exemption also, and 12% coloring books, 18% food. What is the motto of that?
No, I told you, no logic, there's no logic at all. So he's asking, what is the book? Color books is?
Color
12%. Color
books,
books is
covered
12%. Notebook is?
18%.
I don't know. Maybe you have to write letter to Arun Jaitley only. I'm not really sure because I was also, morning also.
I think that the government promotes the digitization and save more and more trees.
So once again,
Right now,
once again.
provide the tax on that particular.
No, it's a good idea. He says the government is promoting digitization. According the notebook rate is very high. Notebook tax is very high. I don't think. Students still have to write the exams and still have to prepare. I don't think, but I don't know why it has come. I don't know the motto. Okay, even morning in my Tamil Nadu there is a radio channel called Radio Mirchi. Radio Mirchi is here. Okay, they called me and asked me, is there notebook issue is there? Can you speak? I asked, what is this notebook issue? Note issue is gone. Notebook issue, what is this? No, sir. The government in the tariff has given 18%. Are you not aware? I'm not aware. Just give me 5 minutes, I said, and then I looked at the tariff. Then I found the notebooks on the 18% category. Now, what is the question they asked me was, Satya, look, this 18% is a notebook. It is like penalizing the educating, persons who are educating. The students are getting higher. Okay, if you believe that the students are consume so many notes, then yes. If students are not consuming notes, it's not going to be a burden. Yes or no? Yes or no? Do you think the students are consuming notes so much nowadays? One note for everything. Yes or no? Single note. Some people don't even use the note. In CA course, okay, students don't buy note at all. If they're self-study, they'll tick only, in the book. Only in the exam they write. Yes or no? So there's nothing rational here. I think the government has tried to do something and then bring the rates. Somewhere we can provide justification. I don't have a justification for this. That's what I told also in the Radio Mirchi, on the record, on the phone. It's already dealt with. Yeah. A lot of people will be having a doubt. Yes.
Question is related to invoice. Supply of goods which is subject to turnover discount at the end of year. And what should be considered at the time of raising invoice?
Yeah, this is very important. These are the issues I want. His question is now turnover discount you are giving. Trade discount or turnover discount?
Turnover discount.
How does it work in your business?
Actually, sir, distributor is giving discount to retailer on the basis of turnover.
Sales turnover. It's a discount. When does he give this?
At the end of the year.
It's like they call for a dealers meeting and then they give this incentive to you.
Yeah.
Yes? This incentive is, you were asking whether it attracts GST.
So in GST, what will be the content of the invoice in this?
Okay. First of all, while you are a distributor, while you are a seller. For example, our distributor is wholesaler to retailer. Yes or no?
The main distributor is giving the discount to other distributors.
Manufacturer is giving. Main distributor is giving to sub-distributor. Okay, same model. Wholesaler to retailer or distributor to sub-distributor. This is an year-end discount. Yes or no? This is an year-end discount. In the year-end annual meeting, they declare this. Or on a mail or they call you and declare it in the end of the year. Turnover discount. It does not have any impact on your invoicing. If it is based on the case 1, whatever the case we are talking about is only on the end of the day, end of the year. It is not it is only based on the turnover what you have made. End of the year, the discount is announced for you. But on an invoice basis, for each sale when you make and they provide a discount, that has an implication. It's an incentive they give, you will deduct it from the transaction value. Hope you got the point. Yeah. But remember, the discount is passing on down to you. That is distributed to sub-distributor. The discount supplied to you attracts GST. You got the point? At the year end, when he gives a discount of, let's assume, how much is your turnover? Simply you tell me, no? Just tell me how much turnover, generally. For example, let's assume 3,000 rupees turnover discount is giving you. 3,000 rupees. Let's assume. Okay, don't think it is less. Tell me your number. Oh, don't want to reveal, no problem.
It is decided at the time of supply of goods.
You are changing now the business model. That's the reason I asked you. Each supply of the goods.
Not each supply, sir, but whenever the dealer comes first time with the main dealer, at the time of contract.
At the time of contract. That is like when you enter a contract, in that they mention that 3% of the turnover discount will be given at the end of the year. How do I treat it in the invoice? Yes? Okay, what is your business process? In the invoicing, do you pass on this discount to the customer? That's my first question. You will only pocket it? No. You will only pocket it. Then if you pocket it, then it does not have any implication. The discount what your main distributor is giving to you, that discount is a supply and that discount will get attracted GST. Yes. Same concept, yeah. Yeah, please pass on the mic. Where is it?
One more question. When goods is exempted from the GST, goods is exempted from GST. Does the supplier of the same supplier required to get registration? Say for example, in case of milk.
If you want to take the credit, in case of the milk, it is exempt. Okay, milk, leave the milk. Milk is a different. exempted product, any exempted product, whatever the exempted, poultry, egg and whatever it is. When you sell an exempted product, you need not get registered. But you will register for what? For taking the credit. Only when you take the credit and when it's zero rated, your price gets rationalized. Otherwise, whatever the tax you pay becomes a cost, yes or no. And when you take the input, you have the opportunity to apply for refund, yes or no. Accordingly, you will go for voluntary. It's an incentive. In case if you are selling for exempted goods, an incentive given by the government is take the input credit and then take a refund. Please go for voluntary registration if that is the case.
Sir, applicability of GST in Jammu and Kashmir.
First July? You are asking whether it will come.
Applicability in Jammu and Kashmir state. GST applicable or not?
No, once again. Can you keep the mic closer?
GST is applicable in Jammu and Kashmir or not?
Jammu and Kashmir? No. Why? You have any friends there?
Hello. Sir, yesterday mentioned CGST or SGST of one state cannot be taken as credit for another state. So, how input service distributors shall pass credit to other unit of other state?
So hereafter there is no, and the first phase of transmission they will allow you. You have excise duty. So his question is absolutely great question. For example, you are an input service distributor, right? ISD. So now you have the chunk of credit with you in your ISD. Now in the transmission provision, first step they will allow you to take, whether CVD or excise duty or whatever credit you have, that will be passed on. But post that GST implementation, the concept of input service distributor may not be there. The reason is, in every state where you have a place of business, you have to get registered, even if it is a branch. You got the point? When you register in the respective state, your records of the respective state you have to maintain separately in the ledger. And the credit utilization will happen in an efficient way. So this situation post GST may not arise.
Sir, but in your PPT, you have mentioned that input service distributor has to compulsory registered. So, is this registration is restricted for the initial phase when you can pass the credit of earlier ones?
Exactly. It's a first, in transition phase alone, the input service distributor has to get registered. Later, the input service distributor will be one of the registrant. All other branches will become all registered party. Hope you got the point.
And sir, second question is on sale of approval, whether when I am passing to my retailer, whether it shall be considered as supply, and when he returns without approval, then it will be again considered as supply, and both the transaction will attract the GST.
Yes. Simple answer, yes. Sale on approval basis or sale on approved basis doesn't matter. Sale doesn't matter at all. It is supply. Whether the movement of good is happening, you tax it. That's all.
So when I pass my possession, and then it shall be considered as supply.
Yes. Again you have to pay tax. Then you can look at the knocking off.
And sir, next question is in particularly restaurant service, when I am selling cold drinks,
Yeah.
and there are two rates, like one is with air conditioner and second is without air conditioner.
Correct.
Then how I can charge the rate for my for supply of cold service, cold drinks, because when as far as AC restaurants are concerned, when I am passing it along with other goods, other foods, then how can I charge? What should be the rate of tax?
Okay. I understood your question. You are in the hotel industry.
Yes, my client is in restaurant.
Okay. I have to tell a story. Please sit. I'll just explain this concept. This question is, and Ankush is right. In a hotel industry, you have to divide the hotel industry hereafter into hotel and restaurant. Even now it is the same. Even now it is the same. When you say hotel, please just give the mic to him. When you say hotel, use the terminology very carefully. In India, what we do is, hotel we use it for even a restaurant. Okay, hotel means hotel and lodging. And hotel where you go and eat a food joint is not a hotel. It's a restaurant. Right? Now, there's a difference between a restaurant and a hotel. Now, it's a hotel. The tariffs are different. The tariff of the hotel, if it is 1,000 rupees tariff hotel, it is 0%. 1,000 to 2,500. How much? 5% or 12%? 5%. And then 5,000 above. 28%. So there are different categories. Again, 5-star hotel is surely 28%. Now restaurant also has that kind of a thing. But one advantage what you have for the restaurants is, government says you can take the combination levy. Combination levy where you pay 5%. But 5% you have to pay out of your hand. But your turnover should not exceed 50 lakhs. These are some of the issues. So in your business, if you are you are in a hospitality industry, let me put it like this. In a hospitality industry, there are two divisions you will be running. One is a hotel division, another is a restaurant division. The hotel division, room charges, you will collect the rates according to the rates, what tariff what you charge. And even now you you take a signature only, no? When you come, you send me a food to my room. Yes or no? That's a restaurant services. So whatever is applicable, you have to pay. So it's very simple. But people have mistook it. This kind of cool drink only you supplied. That's all, no? 7 rupees. 7 or how much? Whatever. All right? You are clear? Yes. So you no need to confuse. Don't put it bundled. That's what. First, you should know the English. Anybody, I was also under the same impression until last week. Hotel and restaurant, what is the big difference? Difference is the restaurant is a food joint. In a hotel itself, there is a restaurant. Yes or no? That's a business process understanding. Now I got. So everybody is going through the same phase. Don't worry about it. You want the tax rate? I'm not able to remember the entire classification. I've just forgot. I have that written in my notebook. I'll share it. I don't know whether I've written it here. The hotel industry tariffs. If you want, what is the hotel industry tariff? That is 1,000 rupees exempt, 2,500 to 2,500, 1,000 to 2,500 comes under 5%. 2,500 to 500 comes to 18%, and above 5,000 comes to 28%. You are in the hotel industry? Yes. You are going for a strike in Gujarat? Towel industry. Oh, okay. Trident. Travel industry. Okay. How is your impact for you in GST? 28% in traveling. Tourism. Exactly. No problem. Client will pay. You need not worry. Why a businessman has to worry if the client is ready to pay? If a client is ready to book an air ticket even economy class is very less, no? But if you bundle the service as a tourism package, you will be hit. Tourism package is 5% to promote tourism in India. Motto. If it is high means I don't know. If it is low means I know. Okay. Okay, all right. But one thing I cannot digest is the baby food. Why they taxed at 5%? Yes. Okay, all right. Then.
Sir, we discussed about value of supplied goods and services. That we discussed deducted from transaction value. There is return discount mentioned in the invoice, and another thing is post supply discount or before supply, and can be linked to invoice.
One by one, can I take it?
Discount mentioned in the invoice, and another thing, post supply discount.
No. First, the discount mentioned in the invoice. Discount mentioned in the invoice, you have to deduct and the transaction value gets revised. On that you have to pay the tax. Got the point? Next. Yeah. Post supply. Post supply discount known before supply, you will deduct in the transaction value, no? Post supply. So it is not appearing in the invoice. That's an incentive what you give. So how does it operate? In which business you are in like that? I want to know. Commission you are providing. That's what I clarified, no. Separately when you pass on the discount, it's a supply of the discount that will be taxed. Why should you link when there is no relevance to the invoice? Are you giving the discount based on the invoice value? If so, reduce it from the transaction value. confusion is there, no? The discount discretions, these games of discounts, you have to streamline it. There are only two things that should be done in any business. One, you provide the discount on the invoice, have a policy for the discount, or otherwise it's a confusion, a lot of confusion. Okay, even if you're passing on the discount, later point of time after the invoice, it will not appear in the invoice. It may be based on the invoice. But it will not appear in the invoice. That does not have any relevance to your inward or outward supply. It is a discount that you are passing on. That discount what you are passing on, you have to pay taxes to the government, GST. No, what I'm saying, if you are providing the discount, no, two category we will classify. Discount known while you are actually sending the invoice, while you are selling it or supplying it, then you will deduct it from the transaction value. Later, as per my understanding, later when you are sold, supply has happened, later you are coming up and giving a discount on a discretionary basis to few people. That I know. When I give the few people, what is my understanding is that discount what you pass on, that will not be knocked off on the invoice because already invoice is raised. Now that discount what you pass on, ideally which was supposed to be deducted from the transaction value, now attracts an extra tax also. Hope you got the point. According to me. Yeah? So it is decent design. So if you want to plan your discount schemes, plan it in such a way that it's uniform for everyone actually. Yeah. You're justified? Yeah. Okay. Once again, bring the mic here. Very important point is making. You are into business?
Yes.
Okay, right, good.
So I am manufacturer and right now my turnover is less than 1.5. So my suppliers are I can't avail the excess credit right now. So in the stock on the 13th June, can I avail that excess credit after GST?
Under the, now you are covered under the 8 bar 2003 notification.
Yes.
That is a notification based on which you are exempted for your information.
Yes.
Okay, that you should be aware. You should know under what benefit you are getting it. You are getting it under 8 bar 2003 where your turnover is 150 lakhs, huh? 1.5 crores. Okay, now this benefit whatever you are taking will not be available in the present GST. Now what is your question?
So on 13th June, I have stock, finished goods, okay, on which I have charged 5% VAT.
5% VAT. Fantastic.
Okay. So I have stock also on which the suppliers can give me credit of 12.5% excise. But I can't avail that credit because I am in exemption notification. So can I avail that after
No,
GST?
one second. Let me stop you there. You are saying the supplier might give you 12.5% credit. What is that might?
If I am charging excise.
If you are charging excise, then you would have paid. He would have given the credit to you.
Yes.
You would have taken the credit. When your excise duty is not applicable, now you are looking at taking the benefit using this opportunity, which will not be available. Obviously, don't be dull. It will not be available. No, it's a very good. It's a very good question.
So what I have to do, I must have the less stock on the 13th June. That can be only the help.
Yes.
But after GST, I can avail that credit on the first day, on the 1st July. Okay, if I am purchasing something from my supplier and he will charge 18%.
You can take the credit. So avoid. So your advice for you. You are a small time player. Cash is very important for you and credit is very important for you. See, under the present existing system where you are exempted from excise duty, I will tell you what is the story. This man started the business after your college, yes or no? And your turnover is just 1.5 crores. And what he has done, your CA has advised you to take 8 bar 2003 notification. And you started taking it. Now VAT is only applicable on your sale. Now you have a stock in your hands. The stock is there, needs to go down. Now it has to be that you are fearing that on 30th you will have a stock. And you are looking, is there an opportunity for you to get extra benefit because of this transition? Yes? Because of the transition, you will not get any extra benefit. Second, the VAT credit what is available to you will be available under the GST credit. What is the business advice I will give you is avoid purchasing inputs in the last week of June, provided you are not able to manufacture. Because under this, if you buy, you are denied the credit. Just if you wait for one more week, GST will come, and July onwards, if you purchase the input, you will get the input credit. Got the point? This is what we should tell the clients actually. These are the questions that will come. It's a good point actually, and that means he's involved in the business. What business you are working on? Adhesive chemicals. So you are the boss of the company? Alright. Please convey this. It's very important. You cannot, see, in a transition period, whatever is existing you can take. Have you ever seen, except capital goods, is there anywhere there came and gave the extra benefit to you? How is it? How can a country do that? It will not be. So this will also not be available according to me, and I can give you that. That's not be available. Yeah. Yes. Yeah, I will take up the question there.
Our final product is exempt.
Your final product is exempt, yes.
The input credit is not available. What will be the position of stock as on 30th?
So under the existing regime, your final product is exempt. You have a stock. You have input credit. Avail the input credit. Whatever the stock, whatever the duty.
Currently, I cannot avail the credit.
Huh?
Currently, I cannot avail the credit because our final product is exempt.
Currently, under the indirect tax structure, where final product is exempt, no problem. But for the stock, the credit would have been taken. You would have taken the credit for the stock.
For the last day, we should take credit for the stock, not today itself.
For last year's stock, is it? It's more than 1 year.
On the day of transition,
On the day of transition, if the stock aging is just 1 year before that, you will be allowed to carry forward the input tax credit what you paid for the stock. Yeah, raw material, packing material, all the input tax credit will be allowed to be carried forward. And when you go into the GST, if your product is not exempt, this input tax credit what you availed, you can adjust against output tax of the GST. Yes, sir?
how much
No, I'm not able to hear you. If you be louder.
how matching concept will take care in case of advances? On the advance, I have to pay the GST, but that will not come under the matching concept.
No, we are asking about the GST or advance concept.
Yes.
That's what I told you. Year after, invoice you will ask. Invoice raising will precede all your anything. You take advance or you don't take advance, invoice will be the first fundamental based on which you will take the credit.
On the case of advance, I will pay the tax. So will I be able to take credit or?
So you're saying advance will be paid first and the invoice will be raised later.
Yes, because suppose I am giving a job work of 3 crore to someone, then I have to pay the advance, then he can purchase something and manufacture for me.
Need the advance.
I
Okay,
cannot
you get advance. No problem. You get the advance. When you get the advance, that advance attracts the GST. You have to pay GST on that.
I have to pay GST, but how it will be in the matching concept? Because invoice will be created once he will deliver the product. So invoice is not there, so where I will show that tax paid on the advance.
That I will take up tomorrow. Technology.
Okay.
Technology, and tomorrow I will take it up. I will explain that process. Because I will again explain the technology, how it operates in the detailed format. So how it is going to be, taxpayer and things like that.
One more point that the invoice matching will be on month basis or will be carried forward.
Invoice? Month on month.
So that gentleman asked the question that suppose on the 28th September the goods are sold, but in transit up to 3rd of October. I received the material on 3rd of October. Vendor will upload invoice on 28th September, but I cannot confirm it in my inward supply. I will put in inward supply in the month of October only. So how the matching will
See,
take
that's
place?
where you should become more efficient. Why? When the product
Practically, suppose it's in the Tamil
No,
Nadu and I am
practically-
in Gujarat, and from the material there on it's delivered to my place on 28th September you delivered, it will reach 3rd of October only to me, or 5th of October.
you were asking, sir, that September 28th the goods have been dispatched.
Yes.
But you received the goods when?
Received the goods in the next month, 5th of October, 14th of October.
14th of October you are receiving. 14th of October also you have the opportunity to go and update your GSTR 1.
Vendor will update on September itself because he will
No,
receive
let him be. Let him update. Let him update.
that
What
will
is the opportunity available for you to file the return? Until what time? Until what time?
until 20th.
20th. And now, when the vendor has updated, now when you are receiving it, yeah, when you are receiving it, for you it's an invert.
Yes.
For you an invert, only when the inward and outward matches for a particular month, then you will be able to file the return. So while you are receiving the, see, that's what logistics efficiency and your dispatch of the goods will happen, and that's how it can practically, what you say is now presently it will be a problem, teething problems where it will not match and there will be a delay of the products, but later when the logistics improves, these things will actually streamline. So it can never be possible that, why did they fix 20th as a date? Never be possible. Let us assume you told me about 28th.
Can happen 15 days vehicle was stuck somewhere else or something
So these are all the
Whatever is
difficulties which are the things which has to be addressed specifically. That notification, clarification will start coming. Until now, there is no answer.
Thank you.
He's right. See, his point is, now I'll explain what his question is precisely. Listen, he's asking, I am dispatching the goods on September 28th. My vendor is dispatching it, whatever the question you asked also. I am dispatching the goods on September 28th. I am receiving the product on October 10th, he says, 14th, he says. I don't know which place he's sending, so much time it takes. But it takes in our India because he says some strike happened. Yeah, and some issue happened, it may happen. These are all the problems in the country for which your system has to support. For this clarification is yet to come, and all this how to avoid all these things, these are all the sessions that need to now learn it. And these are all practical difficulty in implementation of the GST, for which FAQs and resolutions will start coming. As of now, how the system looks is, in any part of the country you send, you will receive the inward also within 1 week. The target is to ensure that the product reaches within 1 week anywhere you send. You took the last date. Let's assume September 10th you dispatched. Ideally it should have come in September 30th, yes or no? In a month. So this is where the government is saying we need to improve the logistics efficiency. Hope you got it, sir. You got the answer? Clarification is yet to come. We will update about it. Practical, yes, lot of practical. In our country, everything we put that in the bucket called practical difficulty, and we want cash is a practical difficulty. This is a practical difficulty. We have to change this. For that only the act is coming. So it will slowly change. Questions?
Cash available credit is fine, credit is fine, but due to cash business, most of the stock already existing would be like 40 to 60% stock will have not credit at all. What is the risk factor on those stock?
When you have not taken a credit, is it?
No. Credit on available credit on 40% of the stock is fine, but this cash transaction business.
Yes.
40 to 60% of the stock won't have even on book. It won't be there.
May I know why it should not be there in book?
There is no bill on
Okay.
there.
See, this is also a practical difficulty, sir. This is also a practical difficulty in India. All right. Now, your point is absolutely valid. Nothing can be done.
So it still can be sold on cash.
Yeah. See, it's like this. It's like this. When the demonetization happened, you had 200 crores in cash. You legally earned by selling proper diamonds within your own domestic. You earned. You came to Surat with nothing. When I say you, means anybody. With nothing, you just started doing business. You don't know what is bank. You don't know what is PAN. You don't know what is income tax. You don't know who is chartered accountant. But still you earned 100 crores. Demonetization came on November 8th when Prime Minister told 500,000 is not valid. What is the status of this? You earned well. You sweated. Yes or no? Okay, you build the business. This there in pocket. All the 100 crores is there in pocket. Now what will you do with that 100? You have to go and deposit. And later they will give the notice. Yes or no? And this is precisely a black money. It is the same kind of stock also. Black stock for GST. GST is a surgical strike on black stock. What will you do with that stock? Nothing can be done because the production is not mapped. You got the manufacturing inputs from a black market, gray market, and you manufactured. Now you have the stock with you. Can you transmission the stock? You cannot transmission, and you will only transmission 40% of the accounted stock. And whatever you accounted and whatever you transfer, only later you can sell. Probably at this juncture, whatever the 60% stock is there, leave it. Or how you would have sold when the whole thing, they would do it and then finish it up. Don't ever have a black stocks anymore. It's neither useful for you going forward. Second, you will not be able to give us a collateral also for the banks. Your stock position is good, you will get good overdraft. Yes or no? So use this as an opportunity to streamline your business. When I say you, generally all people. Let's not work for the black economy. Let's work for India. All right, then.
Next question.
Which one? Oh, you want the government? See, he's asking, this stock 60% is there. No, government can it give special scheme. You will manufacture without informing government. You will not comply with any law. But government has to come and support you for all these things. Who can? Arrange, he's going to next level. He's saying, sir, for the 60% of the stock, sir, is it possible to arrange the bill? Arrange. From black stock is going to next level. Manipulation. No, that a lot should not be encouraged. Don't hear all those things. It's not nice. All right. I cannot give advice. It's not at all. It's not right actually. All right. Yeah. Mike. Because why am I asking is, you have a question? Okay, you ask that. We'll come back. Yeah. Somebody has sent a message from outside and then they're asking. Yes? You noted down. Okay.
So, sir, it's related to migration procedure which I received from one of my clients in March.
Migration? March. Yeah.
So, the question is, someone whose gross receipt was below 12 lakhs in previous year.
Yeah. 12 lakhs below previous. In the previous year, 12 lakhs turnover.
It was below 12 lakhs
Yeah.
in previous year. So, we have done the migration procedure.
Yeah.
Okay. So, now he is expecting that from now onwards, the gross receipt will be below 20 lakhs for 2 years or uncertain when we can say. So, can he opt out of migration? Or is it
You can. But I don't recommend that. Why? You are a chartered accountant for him? Or you are a business person? No problem, whatever it is. So your point is, okay, no issues at all. See, when you're a finance student, you'll also prospectively have the clients, right? And you might be working with some chartered accountant, right? Now look, this migration, when you do, when he's in the 12 lakhs bracket, how do you say that you will not achieve 20 lakhs? How do you say? Then plan is changing now. When the plan is to shut down, please go ahead. When the plan is to grow, please register. So intention is very clear. The intention of the business itself is a foreseeable future. If you don't have the foreseeable future, what is the question of, there's no foreseeable future. You say that from 12 lakhs my turnover will reduce to, then why should you burden with getting into the registration? Who compels you? Nobody compels you. So you can just get rid of the migration. That's not a problem.
Question?
Yeah, she has a question.
So my question was that if we outsource the work, like
Yeah.
I have a client, he
Yeah.
is asking me to dispatch goods to Maharashtra, but I asked somebody in Maharashtra to dispatch goods on behalf of me. I am charging an invoice from my client, and the Maharashtra guy would make an invoice in my name. Then what I have to charge STSC, CGST, or ITS?
Okay, for this you have to engage me as a consultant. Okay, all right. But anyway, I'll give the solution. Bit complicated. Let's take the structure one by one. Listen, please. She's making a valid point. It's a business case, but still we'll take it up. It's not a straight case. Now, where are you? No, now means in your business.
I didn't get your point.
No, in your business, where are you actually? You are in Gujarat.
Yeah, I mean,
You are giving the outsourcing to whom?
I'm giving outsourcing to job purpose
Once again, where is the job worker located?
in Maharashtra.
Maharashtra, Mumbai. For example, first one. You are in Gujarat, location of the supplier, and where is the job worker? Okay, job worker. Okay, let the job worker be there. Then, the job worker, what does he do?
I'm assigned, actually, it's like I have got an order from a company to install advertisement board in Mumbai.
Got it.
I have to, there are two ways. Either I hire somebody in Mumbai and ask him to do the work, or I myself dispatch goods there and get work. Instead of me going there, I ask him to do work on my behalf.
Fantastic.
I have to charge an invoice from the company. I take an invoice
No
from
problem.
the company.
No problem.
The job worker will make an invoice in mine.
No problem.
What would be
Nothing is a problem. Once again,
I got it.
nothing. It's a transaction, normal value chain. Any service provider, I'll tell you what. Don't get panic, and I'll tell you. You are getting the services from whom? Where is he located? Who has given the work for you? Is he in Ahmedabad or is he?
He is in Ahmedabad.
Okay. Your customer for whom you are providing services is in Ahmedabad. Start number one. He is giving the work to you to go and install in Maharashtra. But you are not going there. You are giving us outsource work to another person. What is the big deal? First, we will deal with that. Now, that Ahmedabad person who is giving business to you, where is the location of the supplier? You are the supplier. Okay. Where is the place of supply? Once again, listen. That person is giving business to you, and location of the supplier is where? You are the person, and you are here. Place of supply is where? Maharashtra. First thing, when you do business, you enter into a contract. You are a registered person. Okay, when you will definitely enter into a contract with the PO and everything. Now he will buff you up with certain. He will have a margin. You will charge a margin. You will charge a fees. Now what you do? Let's assume out of 100 whatever you collected, you are okay with spending 40 or 30 in Maharashtra instead of you going there, and the balance portion you pocket it. Yes or no?
Yes.
And you will enter into another agreement with the Maharashtra guy. You have to segregate this transaction separately. Now, with respect to the contract given by the Ahmedabad customer to you, the place of supply and the location of the supplier, rendering of a service may be there. Place of supply and location of supplier is everything is here because you are going to go and do there. You are the place of contact for him, right? There you are going to go and do the services. Now, this is one side for which you have to pay the GST. Now you are engaging into another subcontractor, where you are the location of the supplier is where? You are. So you are the location. Where is the location of the supplier? Supplier is in Mumbai. Where is the place of supply? Mumbai. Then what will get attracted? No, CGST and SGST. Got it? This is how you should segregate the business process. For this, you need to work on the SOPs. It's your client or yours? Oh, you are not a chartered accountant. You are a business person. So you can advise this. You have to segregate the business model into two. You win the contract, give the subcontractor. Subcontractors, you develop a SOP. Simple. SOP like this. The place of supply, location of supplier, according to be taxed. Tomorrow, if you give the work to Goa, then Goa is like the same thing. If in another situation where you engage a Ahmedabad outsourcing agency, you want the work from main contractor, you want the work from your customer, then you are passing on this to an Ahmedabad person, contractors in Ahmedabad, then the location of supplier is Ahmedabad, place of supply is Goa. From your perspective, it is within the state. For him, it is interstate. See, in short, what we should say, contract. That is the reason contract reviews has to happen. Yes, you should first review the contracts.
Sir?
I am an unregistered person. Registered person, if my contract is my company, then it is an interstate. Now, one more thing. It is IGST. IGST will not attracted. It is the in the case of a registered person, the place of supply. The here place of supply is the Ahmedabad consumption. No, I'll come back to that. I'll come back to that. We'll discuss offline.
Sir, we are registered as a manufacturer under excise, and we are regularly importing goods from USA. We have a stock of excisable goods as well as a trading item. So, can we claim as excised amount on imported items under trading?
Okay, so
levies?
I can understand. Yesterday you came?
Sorry, sir.
Yesterday you were there?
Yeah.
Okay, nothing. So he's just asking, he's importing the products from US. Now there's an excise duty component along with the customs component. What is that portion called?
CVD.
CVD. Do you think that the CVD is existing right now? Your question is, can you carry forward the credit of the CVD?
Yes.
Yes.
But
In the transition.
on trading items also?
Yeah.
On trading item also? Because now we are not eligible for credit of trading item because we are not registered as a trader under excise.
Once again, let me understand. If you're not registered, how are you doing business?
No, sir. Actually we are registered under excise as a manufacturer. Okay, we supply a machine, suppose a system to our customers. For maintenance of the system, we need some spare parts. Customer will need some spare part. We order or we import from USA and we directly trade to a customer.
Okay, very simple question. You import from USA in what capacity? As a manufacturer or a trader?
As a trader, as a normal import, having a IC code. That's it.
No problem. You are a manufacturer. In
Yeah.
which entity the invoice is raised? When
Sorry,
you
sir?
imported.
Yeah. But,
When you imported, in which entity the invoice is raised? When you imported, in which entity, which company, the name of the company, the invoice is raised?
we
Ah,
yes, the same company,
same company. That means what is the activity of that company?
manufacturer.
Along with that, you are carrying out the trading.
Yes.
Trading is your business as per your MOA.
Yes.
So okay, that means you are allowed to carry forward the trade.
Okay.
Now whatever the CVD you paid, except the customs duty, the other components are creditable. That portion, whatever the credit is available in your books, that can be carried forward for the GST. Okay, don't worry about it. When you cannot carry forward, I'll tell you. When you have smuggled the goods and you have not paid anything, now creation of the invoice is not possible. Right?
Right,
That cannot be, that can never be encouraged and that can never happen. So point why am I asking so much is the billing is very important. You should have bills properly. For a black stock and black activity, you cannot take any benefits under the act. Yeah.
Sir, at a place of supply goods supplied on board a conveyance. For that place of goods taken on board will be considered as a place of supply. So if we supply a goods, say for example we sell a good to party at a Punjab, but we hand over goods to here Ahmedabad to a courier company, and he will take goods by air to Punjab. So what will be the place of supply to us?
Okay, can we take this offline? Can I take this offline question while going? Because there are a lot of things which you segregate and then see it. Because you are saying that you are sending by aircraft, because it's on the conveyance, all those things I have to look at. Then only can decide about the place of supply. Yeah? All right. So we'll break for the, yeah. We'll take the, I think the hall has to be vacated for some program. Yes?
Yes, sir.
We'll take offline. Same question. Yeah. Yeah. Is there in Maruti? I will discuss that. Off the. I'll get down and discuss. I will get down and discuss tomorrow. What is the time?